It's about that time of day again. My name is Joseph. Wednesday evening, August the 30th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro tonight. Crude is bearish and trying to retest yesterday's low, but a rising support trend line appears to be the last obstacle in our way. So we're looking for traps and selling opportunities for a better risk-reward ratio tomorrow up around the highs. The S&P is bullish with a flag pattern telling us to look for buying opportunities with seller failures down at the low of the range. Nasdaq is bullish with another strong but low volume run higher today, and I'm watching for a hidden channel to help me buy pullbacks on Thursday. Gold is bearish with a spike in range telling us to avoid selling too low and focus on selling up above the range. We're going to use that 2-try rule tomorrow morning. Euro is bearish with a potential spike in channel as it tries to finish the move back down to last month's high. Got a big round number, right, with a big cherry on top for the euro, and we're looking for bull traps up above the resistance levels waiting overhead. Boy, oh boy, we are ready to wrap up what has been an incredible month of August. We got one more day left, the 31st day coming right around the corner. We got to wrap up with a month strategy. I'm going to talk a lot tonight about how you can use risk-reward ratio as a good way to gauge where to find the best trading opportunities. And of course, you know how we roll. We always get a great video newsletter for tomorrow's plan of attack. Before we jump in though, I want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link, come here to the blog at Sideways Markets and watch the whole full-length version of our nightly newsletter. While you're here, don't forget, join the mailing list. I'll send you an email every evening when that nightly newsletter goes live. Lower left-hand corner, follow me on my many different social media channels. Pick whatever your flavor of choice and follow me throughout the week for charts, links, and updates throughout the week. Don't forget, grab those charts. How easy is that? All the charts from tonight's video, you can download those and have them ready on your computer for tomorrow. Follow that link on the blog at Sideways Markets. And what are you waiting for? Grab that free pass. I haven't seen you there this week. What are you waiting for, guys? Grab that free pass. Come out and join me as a guest in the trade room. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And if you have any questions, yeah, I'm always here. Hit me up on live support. We got live support on the homepage of the website and, of course, on the homepage here at Sideways Markets. Boy, what a great week it's been. We got a little bit of low volume. It was a little bit slow out there today. We got some inventories on crude. We're wrapping up the month tomorrow. E-minis are really, really low volume, looking almost zombie-like right now. But nonetheless, though, we're going to put a plan together for a great end of August session tomorrow. Before we jump into charts, though, let's not forget about the schedule here tomorrow. I know I'm going to zoom all the way out because we have a peppering of news tomorrow. Before I jump into tomorrow's news, I do want to recap what I mentioned earlier on this week, right? We're finishing up the week tomorrow. Tomorrow is the last day of the month of August. Tomorrow's the last day for traders to pad their accounts for their clients, right? So a lot of traders will be closing out positions tomorrow, and of course that will usually kick up volume and volatility. We always talk about this as we go into the end of the month. We oftentimes see traders taking bigger risks, right? Because they want to pad their numbers to finish up a good strong month. We usually see volatility kick up last day of the month, so keep an eye on that. And tomorrow, the last day of August, is kind of a dangerous cocktail of the end of the month, but we're also going into a holiday weekend, right? Of course, this weekend is the Labor Day, if I can spell this out here, right, is the Labor Day holiday in the U.S. So we got Monday off, right? Monday is a holiday, but I'll bet you there are a lot of folks looking at that Monday holiday and saying, you know what? Why don't we get out early? Let's go to the cabin. Let's go to the lake, right? Let's go to the whatever, right? Go see grandma early. Let's leave on Friday. So I wouldn't be surprised if tomorrow is one of those early in, early out, be careful tomorrow afternoon, real low volume, kind of grindy environments as we get after noontime tomorrow. So end of the month definitely has potential to be a really big firecracker because we're expecting increased risk-taking from traders. We're also expecting to have a little bit lower volume, right, because the holiday weekend shake that up, right, and you've got a firecracker or a powder keg, right, that can easily explode tomorrow. So, we're going to play this by ear. Tomorrow could be very, very active early and then die off quickly. It could be a very rip-roaring day the entire session. Don't forget, we're going to be in our trade room tomorrow morning, 8 o'clock Eastern time, with all of our advanced members. Make sure you come out and join me there as well. Okay, so we got that under control. Let's talk about the schedule for tomorrow. As you can see, there is a truckload of news scheduled for tomorrow and for Friday. Now, first of all, we don't forget about our good friends in China. We got manufacturing coming out of China tonight at 9 p.m. Eastern time. Keep your eyes and ears open if you trade in the overnight Asian session, right, that 9 p.m. news tonight. Then we got a slew of news tomorrow morning, right, 5 o'clock, right, being really this kind of the meat and potatoes tomorrow morning. Got the employment number, right, the home prices, we got the CPIs, got a bunch of big news tomorrow towards the late middle half, right, of the London session, right, London running from 3 a.m. until about 7 a.m. Eastern time. So, right in the, kind of latter half of the London session tomorrow morning. And then, of course, if you're with me tomorrow in the trade room, right, we got the jobless claims, the personal income, we got some GDP and some monthly GDP numbers, right, coming from our friends in Canada. So we got a whole peppering tomorrow around 8:30 a.m. And that pretty much wraps up the major news, right? So major news tomorrow morning, again, 5 a.m., right, in London, 8:30 a.m. in the U.S. We got the PMI number, right, at 9:45. We got pending home sales at 10 a.m. Those aren't going to move the needle too much. I think mostly you'll be weighted there to 5 a.m. and 8:30 a.m., right? So just to recap, 9 o'clock tonight, right, from China, and then, of course, tomorrow, right, 5 a.m. and then 8:30 a.m. Eastern time. And again, keep your eyes open tomorrow afternoon, right, after the lunchtime session expires, just because we may see a little bit of, right, again, a little bit of slowdown tomorrow with Friday really being one of those kind of pseudo traders holidays, right? I'm sure you're probably going to see Friday a relatively light session as well. We'll talk more about Friday's session in tomorrow night's newsletter. We get some ground to cover here in tonight's video, right, for tomorrow's session. Let's jump right in. We're going to be talking tonight a lot about how we can use kind of a look at risk-reward ratio to judge where finding some great trading opportunities will be. Let's start tonight talking about crude oil. Crude is bearish, and sellers are now trying twice to retest yesterday's low and complete their measured move target for tomorrow. This move off the high looks like a spike in channel developing, and this rising support trend line appears to be our last big hurdle at this point in time. The goal is to look for selling opportunities up above the previous bear swing, up around that 18 swing, while avoiding the temptation to sell into the lows until we see a successful breakout pullback. Now, one thing to keep an eye on tomorrow is this possible triangle developing on the chart. If the bears fail to hold this lower, the bulls may push this back up to those highs, but beware chasing this move higher, because there will most likely be additional sellers waiting for a better risk-reward ratio going back down to retest the low. Now, I don't do this very often, but you'll notice I have multiple days of information. If you watch my newsletter, right, you probably have noticed I usually only use today's information, and that's really all you need. At this point, today's information tells us that we have a strong move down into a spike in channel, right? That strong move down into a spike in channel. That spike in channel tells me to look for a trap, right, up above that high, right? It tells me to look for those selling opportunities, right, up above that high. But I want to take a moment here to kind of zoom out a little bit and give us a little bit more context, right? Rather than looking at the tree, let's take a step back and look at the forest a little bit. First of all, as we go lower, we can see we're getting held up right now on this rising support trend line. And that rising support trend line, pretty easy to see. We assume a lot of sellers here will be taking some profit, right, knowing that this is key level of support. We'll take that trend line and you look up top here as well, right? This also now overhead, this could easily develop into a triangle here tomorrow, right? So buy low, sell high. Right now, though, put it in context, very strong move down into a spike in channel. So trying to buy that low right now, Probably not going to be the wisest trade in the world. It might work, but again, we're always talking about long-term probabilities, and the long-term probability of that particular buy right now just isn't quite there. There aren't enough traders that would see that larger, right, triangle or wedge, whatever you want to call it, right? If that triangle does develop, right, we're definitely looking for selling opportunities up around that high, right? So selling it back down, right, to retest that low. So a little bit of context there, right, giving us a reason why we're going to be careful trying to sell right where we are right now. Another clue here for tomorrow: take that trend line off the high. Let's paste it down at that low, and that's going to give us a nice support level as we go lower. Now line that up with this multiple day measured move. Got to redraw that measured move, obviously new high here, right? And that lines up nicely. That 45 half area, 45, 52, 52 of course being the measured move, that channel low being a little bit lower, right around 45, 50. So got a triangle or potential triangle, right? Three things here right now, right? Strong move down into what looks like a spike in channel, right? Maybe it turns into a spike in wedge. Right? Maybe a spike and wedge. Spike and wedges are a lot less common, right? Spike and channels are a lot more common. So spike and channel, that spike and channel tells me let's sell high, right? Let's sell high, make sure we get a better risk to reward ratio. And the most important thing right now is after that, right? After that big strong move down yesterday, right? Remember yesterday we talked about that big strong move. We're trying to wait for that second attempt, right, to sell back down. We got that second attempt, right, shortly after today's inventory report came out. So beautiful example on that. If you listen to last night's newsletter, you are technically and mentally prepared for that today. And you can see here right now that you consider this to be the second attempt, right, for those bears to retest that low. Now that's the big clue right now. The big clue is, where are these sellers actually hunting for? What are they actually here for? They're here to get back down to retest that low. Now, here's what I always look at a chart. I always want to know who has control, in this case the bears. I want to know where their objective is. Where are they trying to go? Every market has a reason it's moving higher or moving lower. Just because I don't know the reason doesn't mean there isn't a reason, right? So markets always have a reason. They're always going for something. It's usually either a measured move or a retest of a high or a low, right? Or a range rotation or a channel rotation. Charts always have a reason. Right now, the bears are trying to get back to that 45.76, right? And here's what I want you to think about right now. The average seller right now has to be looking at this and saying, okay, here's the amount of reward, right, that I can expect, that I can reasonably expect. Obviously, price may go through it, right? Sure. Price may go through that low, but at this point, we can't rely on that. All we know right now is where the objective is. The objective is 45.76. If that's the reward, right, where would my stop want to be on this? If I sold right now, where would be a relatively safe place, right, for my stop loss? It would have to definitely be up above that 18. Right? So that would be my risk. Now you'll notice right now, right, if I draw it up like this, I have roughly balanced risk and reward. Now balanced risk reward is great for textbooks, but in all reality, as a real trader, you want to look for something a little bit more, right? You want to look for a better risk reward, right? How about we get half the risk for the reward, right? Why don't we do it like this? What if we back this up a little bit? What if now we thought, okay, rather than trying to sell here, what if we sold up here, right? Now the reward increases, right? Now the reward increases, and that reward, depending on how large my signal candle is, right? Now, so the signal candle goes up, right? Nice strong candle back down again, my signal, now I can take a lot less risk. Now, I want you to think about that for a moment. This is highly desirable for a lot bigger slice of the market. How do you make money in a technical trading strategy? You leverage, right? You leverage the self-fulfilling prophecy that is technical analysis. Right? Why do moving averages work? Why does divergence work? Right? Why do all the technical tools that we teach on this newsletter, why do they work? They work because people see them. right? And the more people see them, the more it works. The more it works, the more people use it. The more people use it, the more it works, right? We know that. Most people know, but most people have read that first chapter, right, in Day Trading 101, right? So when you think about the self-fulfilling prophecy, I always think about where could I attract the most number of sellers, right? And it's pretty simple. Experienced traders know they're not going to be right every time, right? So they'd much rather get a better risk-reward ratio. So when I look at this chart, and we'll talk more about that as we go forward, right, throughout the rest of the video tonight, right, you always want to be thinking, where is the target? And then where would I have to get in to make sure I'm part of the big crowd, right? Not just the rookie traders that are accepting 1-to-1, but where could I get a 1-to-2? Where could I get a 1-to-3? I really hope you learned everything you needed to know to get those light bulb moments firing off. Great topics on risk-reward ratio tonight. And what was the key? What was the key? The key is risk-reward ratio ain't worth nothing without what? The foundation of long-term probabilities. That's right, the law of large numbers. Hope you learned something. Hope you learned this to earn a killing tomorrow. And I hope to see you guys tomorrow morning in my trade room. Don't forget, if you're on the YouTube channel right now, or if you're watching the full-length version, head on over to schooloftrade.com, right? Saddle up on that free trial. Learn more about all the tools and techniques we use in our beginner, intermediate, and advanced classes. I'll even shoot you an invite right over to our trade room as a guest. Don't forget, beginner, intermediate, and advanced levels of membership. You can learn more on our website, or you can always hit me up on live support if you have any questions along the way. Last day of the month tomorrow. Get at it early in, early out. Watch the afternoon session. And don't forget, I'll be back here same time, same place tomorrow. I'm out of here for now, guys. Be well out there. Be nice to each other, will ya? And I'll see you next time. Adios, amigos. Bye-bye for now.